Well, with bank stocks getting crushed amid this incessant chatter about nationalization, the head of the nation's largest bank trade association joins us to weigh in. Ed Yingling is president and CEO of the American Bankers Association. Ed, it is great to have you with us.
Thank you, Melissa.
Given not only the comments from Bernanke that Michelle highlighted, but also the green speak that we got in the FT earlier this week, I mean, nationalization is really on the minds of everybody. What's your sense of the situation, whether or not that is actually an option that's on the table?
I don't think it's an option that's on the table at all. I think if you look at the fact that Bernanke went out of his way to talk about nationalization, and that was only part of what he said. He went on to talk about real problems with nationalized institutions. And I think in terms of the kind of talk you get normally from the chairman of the Federal Reserve Board, he was trying to make a statement that we think nationalization is a bad idea. And what was just said about Geithner. Geithner's been very clear. He spent the last 4 or 5 days working on this housing plan because I met with him and a group on it. He's been very clear that he thinks nationalization is a bad idea. And if you look at their whole plan, it is designed to attract private capital into banks. You can't do that if you're going to,
Ed, all due
undermine.
respect, since last year, we've been doing bad ideas because we've been told, even though they're bad ideas, they're all we've got.
We have been zigging and zagging, shall we say, for the last year. I think one thing that is encouraging is that the administration has a good team together and they're putting together longer-term plans. I think one thing that's going to start to come into play here, quite frankly, is the Congress is going to start looking very strongly at mark-to-market accounting. There is a wave of anger in Congress about mark-to-market, and you're going to see hearings in the next month, and you're going to see legislation introduced.
Let me ask you directly, because it does sound like you speak directly with a lot of the regulators, a lot of key members of government. Has Geithner or other parties told you directly that nationalization is off the table?
They have not told me directly, nor would they. But I have talked to regulators. I see no signs that they're interested in nationalization. And an interesting thing is the split here is so wide. I have talked to bank CEOs, and you've seen Jamie Dimon saying they are actually planning for ways to pay back the capital. And quite frankly, between kind of speculations based on slips of the tongue and Jamie Dimon, I think I'll bet on Jamie Dimon.
We can't get rid of mark-to-market. Okay, there's got to be some variation of mark-to-market. Because if you get rid of mark-to-market, I'm pretty sure everyone, even bankers, will say it does create more uncertainty. What's on the books? So what are some of the ways we can do this and still retain a fig leaf of responsibility?
Well, I won't comment on the fig leaf, but I think the Congress is really looking at an important report that came out from a group chaired by Paul Volcker about 3 weeks ago. And it was from the Group of 30, and Geithner and Summers were members of the Group of 30, although not part of this report. And they say you need to address the fact that mark-to-market doesn't work when you have dysfunctional markets. And you have to go into the securities, examine their cash flow. I've seen it done. And the market is so far below what they're really worth, and I think that's what they'll go to. I think they're also going to give the Fed, ultimately, some say in the oversight of accounting policy.
One last question to you, Ed. As we watch the banking index, KBW Bank Index, approach lows that we have not seen since the inception of the index in 1992. The major concern for investors is tangible common equities. We see these share prices continue to drop. Citibank CEO has said directly that's not a good measure of financial strength. What would you say to investors at this point? Because that is a huge concern, that banks are going to have fewer choice in terms of raising capital.
I think the market at this point is looking for any reason to find something negative. That is not the way that we have historically looked at capital. I think if you look at the Geithner plan again in detail, he's looking at that issue. But I think it's a mistake for the market just to focus on that very narrow definition.
Okay. Ed Yingling.
We have to leave it there, Ed. Thank you very much. Appreciate your time, Ed Yingling, American Bankers Association. That, of course, is, no matter how you feel about mark-to-market, it was based on the theory that there would be a market. And if you don't have a market to mark to, which is what we've got now, you got to do something.